Welcome to day 34 of 90 Days Reels Challenge. And today we are going to discuss one of the important concepts when it comes to making big amount of profit in stock trading, and that is called as pyramiding. This particular concept is like as and when we are buying any of the particular stock, if that particular stock moves in our favor, which means we are making profits and the market is telling that you are right, at that point of time, as and when the stock goes on the higher price, we are adding more positions. And similarly, from that point of time, if it goes way beyond that, then again we are adding more positions. But the contrary is that there are a lot of people in the trading universe, those who actually pyramid, which means those who actually add more positions, those who actually average those positions when they are making losses. And this is why a lot of people lose money when they pyramid on the negative side, which means when they are making losses. But in order to become a profitable as well as professional trader, it is absolutely mandatory to average as well as pyramid the stocks which are only and only in profits. So this is a short glimpse about pyramiding. I'll see you tomorrow with some new concept.